You're watching Byline Wilmington on CBS 10 WILM. Here's your host, Don Ansell.
We're back. We're talking about after the fall, the 2009 stock market, and where we go from here. Our guest, Vinton Fountain, president of Fountain Financial Associates, and Dr. Clay Moffitt, who is an assistant professor of finance at UNC Wilmington. Let's talk about the recent headlines on one of the biggest stock market frauds, allegedly, in history. Bernard Madoff was a well-respected Wall Street entrepreneur, now charged with a colossal Ponzi hedge fund scam. With loss estimates, it's like $50 billion. Comments?
Well, it's devastating. I mean, it's another shoe to drop that is destructive for confidence, which is unfortunate.
And that is the crux of market. It's public perception and confidence.
It is.
To a great measure?
Oh, I think so, yes.
That's
I mean,
huge.
we not only have a credit crisis, but we have a confidence crisis, really. And that's really what it's all about, is getting back on our feet. But one point I'd like to make about the Madoff story is that the people that were giving him money evidently did not know what was happening with the money. And I think a point that we can all learn from as we look at this crisis is people should understand, where is the money? What are you doing with it? And ask questions. And if you don't ask questions, unfortunately, you know, situations.
So for your clients, you know when you place their money, where that money is going in, and how companies are using that money. You know
yes,
that?
Yeah, and you must know it, because as a fiduciary, I would require that there be transparency in terms of where those assets are being invested.
You would require.
I would, and it's one reason that I've stayed away from this concept of hedge funds, is because with a hedge fund, you sign an agreement that says that you really don't know what's going to happen, nor will you get in the way of what they're doing with the money.
Clay?
Yeah, I think you know, the Madoff situation is a good example of government regulation. A lot of people argue that we need more regulation. Well, everything that Madoff did was already illegal. You know, whether we like it or not, there are going to be some people out there who don't care about the laws. They're going to lie, cheat, and steal. You know, the best we can hope for is to discover them early, which the SEC was obviously a little slow in responding to, you know, certain types of information.
Where was the Securities and Exchange Commission while all this is going on? I mean, that's a pretty, $50 million is
50 billion, yeah.
Did I say million?
Yeah.
$50 billion.
When does the government ever quickly respond? You know, if you want a good example of how the government works, look at some of these public works projects that Congress has approved and proposing. Last fall, they voted for a $38 billion public works projects that was quote unquote ready to go. That's kind of the new phrase on the Hill.
Hit the ground running.
Hit the ground running.
Right.
And out of that $38 million, $38 billion, I'm doing it now, $9 billion of it will be spent in 2009. The rest of it will be spent downstream.
I went to the Securities and Exchange Commission website, and what do you think their #1 priority is on their website? It's to protect the investors. And that's like the Food and Drug Administration saying, our food supply and all the drugs you take are safe because we're here. Yeah. It's just not true.
Yeah, again, they've got regulations that would fill walls. You know, it's got the Federal Register, the laws pertaining to corporations, runs about 69,000 pages. You know, we've really lost the ability to define what is lying, cheating, and stealing.
But, well, how are we going to get that? How are we going to find our way back to that? I mean, Enron, WorldCom, Tyco, billions and billions and billions, and the investors, the public, the taxpayers take the hit in more ways than one.
Well, look at Raines. He basically gets a $240 million bonus. He's found guilty of fraud, so he has to pay 50 of it back in fines and penalties. I'll take that trade all day long. Mm-hmm. So we need to make the punishment fit the crime, and we need to simplify the laws so that there are, you know, clear understandings of what's required. The laws are so complex that now attorneys can get their clients off, as we've seen in the criminal side, based more on process rather than the facts.
We won't solve that here this morning, but so far in 2009, the markets have been in more positive territory. Have we bottomed out?
I don't know. And I wish I did.
Right.
And nobody really does, particularly investors, speculators may think they do. But I've got the feeling that we've seen the worst. Here's a point that everybody should remember, and that is if you put $1,000 in the S&P 500 index in 1945 and you left it there until December 31st, 2007, it grew to $1 million. During that same 60 years, 60-year plus, we had 12 bear markets that felt much like what we're in right now. The average decline was 30% for each of those 12. And what I'm describing is $1,000 invested in 500 businesses in America brainlessly. No monitoring, no trading, no worrying about it, just letting America work.
So if you take a broad historical perspective and you live long enough, you'll do all right.
Most of us don't have a 60-year time horizon, as many of my friends remind me. However, the numbers, Don, in terms of U.S. equities are very similar, even if you shorten it to 20 and 10-year terms. So the essence is, if the market goes down and stays down, it'll be the first time that's ever happened. It's never happened before. It's always come out, and I expect it will this time.
I want to throw a few names. I'm not talking specific stocks, but categories. And I just a quick reaction maybe from one of you or both of you, if you have a strong feeling about it. Bank stocks, Vinton.
Cheap.
Probably will remain so.
Well, that's even maybe a more important ingredient. The big three?
A big gamble. Chrysler is really, they didn't sell as many cars in total as Toyota did of one line of cars, one particular model of cars.
Oil stocks.
Attractive and needed.
Somebody said now's the time to invest in alternative energy, companies that make windmills and sun energy.
I don't think so.
No?
They're generally terribly inefficient, still overpriced. For example, a lot of people will argue about buying a Prius. Well, apparently the carbon impact of manufacturing a Prius is greater than what you'll save over 10 years of owning it. So
how about entertainment stocks? Time Warner, Disney. Not those specific stocks, but that genre.
I think there's a place for that, but a diversified approach with really each of these areas is really what's necessary.
Diversity used to be a hedge against dramatic loss. That wasn't true this time.
Yeah. This is really the first time in really my 26 years of doing this work where literally every asset class went down last year, with the exception of short-term U.S. Treasuries, which are paying, I think, 20 basis points.
T-bills even went negative.
Yeah.
People were actually paying the government to own Treasury security.
We have about 30 seconds. What's to prevent this from happening again in another 80 years? Or is this cyclical and we will see other dramatic drops like this, Clay?
We'll always have excesses in the market. The thing to remember is that capitalism, as painful and contentious and ugly as it can be at times, is, for all of its faults, still the best system out there. It has given us unparalleled levels of prosperity.
Or as Churchill said, it's the worst system ever invented except for any other. Right. Vinton, just fast.
And I would concur, it's good news, bad news. The bad news is it probably will happen again. The good news is we'll get through this and go higher and be more prosperous in the future.
People just need to understand it's their money. Nobody's going to watch it as well as they do.
That's going to do it. Thank you so much for joining us. If you want to see this program online, go to WILM-TV.com and click on Byline. Next week, stay with us. We're going to talk about the W presidency and the issue of legacy. I'm Don Ansell. Have a great week.
You've been watching Byline Wilmington on CBS 10 WILM. Join us every Sunday morning at 11 as we explore the issues that concern you.